Okay, so just say big thank you to all you for coming to the webinar. This is what we're going to walk through today. Is really um, it's maybe a slightly extended version of the talk that I would walk people through who were my clients. And I say extended only because I would tailor this specifically to whatever was going on with my particular client. This presentation is really just a boiled down version of that. So to that end, the reason I wanted to do this was to let anyone who's struggling to find one, just in general, we should not be overpaying for anything really in our business. I mean, with everything that's going on with COVID, just now more than ever, it is important to be diligent and be thoughtful about how we are spending money, where we are spending that money. And while workers' comp is an incredibly important and also mandatory part of an insurance program, if we have employees, there's no reason to overpay on it. And I think, unfortunately, a lot of the opportunity for my own business, selfishly, is that I run into organizations quite a bit. And it's really why workers' comp became one of the avenues that I became a specialist in, was, is that there's just so many businesses that are overpaying for various reasons, and it's just simply not necessary. So to that end, we're going to walk through, we're going to talk about a whole bunch of different stuff. We're going to take you through this process. And at the end, hopefully you'll have a good idea and some actionable tips. So the first thing that I just want to run by you, and this was in, if you got an email from me or saw one of the things I did in social, or if I reached out directly to you on LinkedIn, or you're one of my current clients, workers' comp rates are not set by the state, or they are set by the state, but that does not mean that what you actually pay is set in stone. And, this idea that you have to pay, that somehow the state creates a rate, and whatever that rate is, it is what it is, and you just have to live with that, has unfortunately cost a lot of businesses a lot of money. And I bring that, this is kind of the start of the conversation, is that workers' comp, unlike any other policy in the basket of policies that you may have in your commercial insurance package, is one of the few that you actually play a major role in controlling the cost. So what I mean by that is your general liability. Yes, you price out your general liability to different carriers. You work with your insurance professional to make sure your business is operating safe, and that you're properly aligned with a carrier that understands your industry. And maybe if you shop that out every few years when the market dictates, you can find some savings. That can be the case for sure. But with workers' comp, it really is you. It's you and your business, the process and procedures you have, the relationship you have with your insurance professional, and the work you do both in consistently auditing your workers' comp policy, understanding what goes into actually creating the premium that you pay, the net premium at the end that you actually pay, what goes into that, and kind of thinking, even if just for moments, each year or each month, thinking through the filter of risk management. What are we doing to make sure that our people, our staff, our employees, the individuals who make our business happen, what are we doing to make sure that they're safe? And there are a lot of indirect benefits and subsequently indirect costs to either focusing on risk management or not. And that's what we're going to address today. So what is the total cost of risk? And this is terminology maybe that you've heard or not heard. I talk in terms of total cost of risk. And in all transparency, I have a mentor that I work with very closely. While I've spent, much of my own 15-year career focusing on commercial insurance, and workers' comp has been a big part of that. Over the last few years, I have worked with a mentor who actually is out of Florida, and he's taught me about the idea of total cost of risk. And as I've become more accustomed of thinking this way myself, I've been able to help organizations drastically realign their culture, not the entire culture of the business, but certainly how safety and risk management plays a role in the culture of an organization. So when we're thinking of the total cost of risk, we're talking about all the quantified costs, and that says cost. So there's an issue right there, but all the quantifiable costs and expenses associated with the risk management function. Okay. So this could take many different shapes. This is indirect costs. This is direct costs to your business. And we'll define what both of those things are. But total cost of risk plays a role for a bunch of different reasons. It helps you when you think about the total cost of what's happening. So not just your insurance premiums, right? Your insurance premiums are one piece of it. It's the most in your face piece, right? It's the bill that, you got to think about your payroll, and then you got to write this check to your workers' comp carrier, whether that's monthly or yearly, however you decide to pay, that it's directly coming out of your bank account. It hits your bottom line, right? So that's the most in your face piece. And unfortunately, that is as far as most people go. And because of that, and we're going to talk about how the insurance game is played in a couple minutes, but unfortunately, because most organizations stop at just what they're paying in insurance, they miss all the other costs to their business. So what do I mean by that? If you're looking at your workers' compensation premiums and you're saying, okay, I'm paying, every month I'm paying, say, $3,000 for my workers' comp, and let's make sure we shop that out this year and see if we can't get something a little less. Well, that's a direct piece of the cost. But what are the indirect costs? What are going into the reason you're paying $3,000 a month? How many people, what goes into the lost productivity, right? This is a big one. So you have people who are getting injured, and now you're not just paying $3,000 in workers' comp premium, you're actually losing top line revenue because someone in your organization is not able to produce, right? So if they're sitting at home, or even if you have a return to work program, which we're going to discuss in a couple minutes, and that return to work program gets them back on a limited work basis, so they're doing something at least, they're not at full productivity. If they're not at full productivity and they're an essential part of your business, then you either have to bring someone from another department or another function into that role, or you have to hire, even if that's on a temporary basis, to fill that role. Or in some cases, and this is a real problem, is ownership or leadership will drop down into a position to fill in for someone who's been injured. And now when you really start to think about the cost to a business of a leader who may be a $250, $350, $450 an hour, worker, if you were to really quantify what they do, and then they're dropping down into someone who maybe is a $100 an hour or even a $75 or $50 an hour task-oriented employee just to get the work done, there is major productivity loss there. And my point in sharing this with you is just to give you an idea, one example of a situation where, that leader, that owner should be out developing business, working on partnerships, making the big deals, right? I mean, these are the things that an owner does. Operating the business, making sure it's all the pieces, all the resources are optimally positioned. Take a major landscaping operation, right? So if you have a crew chief go down, you can either bring someone from that crew up, and now they're managing it, but you're down a person. So you have to either shift over, reposition assets. You have to hire somebody on a temporary basis, right? Because now that crew chief is down, or you need to take someone from a position above that individual and drop them down in. In either scenario, you have multiple additional costs beyond just the impact to your workers' compensation premiums that you're paying due to the injury that crew chief sustained. And this is, that's just giving you guys an example of what total cost of risk looks like. And by thinking about total cost of risk, it allows you to make effective risk management decisions. So by dissecting your workers' compensation, and we're going to get into the nitty-gritty details in a minute, but by dissecting your workers' compensation policy, the procedures and processes that are set around your safety program, your return to work program, what kind of, you're able to find the areas in your business that might be creating additional cost that isn't just your workers' compensation premiums, right? There may be a certain tool that produces injuries more often than others. There may be a certain way that you're going about operating your business that's costing you more than due to injuries, due to lost time from workers than you knew. So this is just a broader way to think about it. And what we do when I come in and work with, our team comes in and works with an organization is we drill down all the way into these processes. And if the organization that we're meeting with buys into the process, the changes can often be substantial because now you're thinking on a much broader scale. So it's lost efficiency. It's also lost productivity. And ultimately, when there are a high frequency of injuries or severe injuries inside a company, it can have a substantial negative impact on the culture of that organization. Okay, so we're also going to measure, by thinking about total cost of risk, you're measuring the progress towards risk management objectives. So we can ultimately set, again, this isn't stuff that you're thinking about 24/7. You have to own a business. You have to manage a business. You have to be a leader. Oftentimes there are functions inside an organization that you as a leader are performing beyond just standard leadership activities. So, this isn't something like you need to be thinking about risk management all the time. But by doing the work up front, you're able to set objectives, safety objectives, maybe reducing frequency, maybe reducing severity, maybe helping people get back to work quicker, maybe setting a weekly safety meeting, or making sure that someone in leadership is able to, or management is able to make drop-ins into work sites to do spot checks on safety, things like that. Just having a general sense of what safety means to the business and how it impacts, all these things ultimately come back to impacting your workers' compensation premiums. If you have a safer business that doesn't have as many accidents, and when those accidents happen, they're not as severe, and when they do happen, you're getting people back to work quickly, so you're reducing the number of claims on your workers' comp policy. Now that's what drives your comp premiums down. So, okay. So all these things ultimately lead to the pricing of your products and ultimately your services. So the various total cost of risk components, we talked about some of these, actual insurance costs. But the one that I really want you to focus on here is indirect costs, right? There are many indirect costs to your workers' compensation. Before we get there real quick, and I kind of skipped over this, you see under other services fees, risk management consultants. Now you may be sitting there and saying to yourself, this is, we would never hire a risk management consultant. We're not that big. Maybe you are, but for most organizations, the idea of hiring a risk management consultant, maybe it makes sense to bring someone in once a year to audit process and procedures, but certainly having someone on staff all the time is not something that most organizations, most mid and small organizations even need, but certainly don't have the resources or the desire to have all the time. This is where the idea of I said before, we need to think about how the insurance game is played. So insurance professionals are paid in one of two ways, sometimes both ways, through commissions on premiums and through fees occasionally, depending on your state and the policy and how it's set up. And there's different regulations per state on how you can charge fees, what you can charge fees for. But oftentimes, the vast majority of insurance professionals are paid through commissions. So it is in order for an insurance professional to be financially successful, they are incentivized to, I'm not going to say push premiums up because that sounds nefarious, and that's not necessarily the case. But I shouldn't say they, because I am an insurance professional, we are incentivized to a certain extent to be lethargic on savings, right? Once you have someone into your organization and they're paying commissions, there's like a 90% chance that you're going to renew that business. So the average renewal in the commercial space is somewhere between, say, 82 and 87% of the time, a client renews their policy with the same insurance professional. So if once you sign up and decide to do business, you hire an insurance professional and they're handling your policies, there's an 82 to 87% chance that you will stay to it. It depends on line of business and whatever. We'll just call it 85. There's an 85% chance that you will stay with that insurance professional. And insurance agents know this. So they're incentivized to not necessarily shop your rates once they have you in. They're incentivized to not do additional work because that's work that they're, kind of quote unquote not being paid for. They've already been paid. They already know that they've got you in. And if they're making a 10% commission on a workers' compensation policy and they come back a year later and they've put policies and procedures in place to help you reduce your commissions, they found you or your premiums, they've helped you find credits, they're working with you on your experience mod, which we're going to talk about in a few minutes. These things are ultimately doing themselves a disservice by decreasing the amount of premiums you pay and ultimately decreasing the amount of commission they make. That breeds lethargy. And one of the reasons that I call this agency rogue risk, you don't hear insurance is not in the name of our business. I use the word rogue as the name of our business. We do things completely differently. And it's more work, really. I mean, what we're describing is way more work than most insurance agents do. And we don't focus solely on insurance. And ultimately, I think that, while I think pound for pound, we probably make less per account if another agent were to come in and take and work with you. That's not why I got in the business. And it certainly doesn't help you over the long term. And I think it's a much longer game to play. So I want you to I said that because you are paying a risk management consultant today. Whoever does your workers' compensation insurance right now, whoever that agent is, you are paying them to be a risk management consultant. They just either are or are not performing that function for you. So I want you to be aware of that. Like, part of the cost of your workers' compensation is that you should be getting, in some way, shape, or form, a risk management consultant or risk management consultant services from the person who is providing you with that policy. So you're paying for that today, whether you are getting that service or not. So just understand that there are many things. I like to explain the insurance game to my clients because I think transparency is a key to life. And I think it's a key to having a good working relationship with your clients. All right, so let's talk about indirect costs. Indirect costs to your business, loss of productivity, we went over that. Overtime costs, right? So let's say you need a job let's take that same landscaper, they lose their manager, their job site manager, and one of the the staff members underneath that person has to roll up and be the manager. And now you need to bring someone from another job over, pay them overtime costs, right? To get the work still has to get done, even if someone's not there. And if you only have a certain number of people and you can't hire, that often leads to overtime costs. And what we do is we just look at our business. We go, you kind of throw your hands up in the air and you go, you know what am I going to do? Like, I got to get the work done. And we just write it off as part of the job. Well, what I'm trying to express to you is that by focusing on your total cost of risk, by focusing on safety and procedures and processes, these types of things don't have to just be the way business is done. Hiring and training costs, bringing on new people takes time. It takes, if you're in a leadership or management position, it's taking your focus, time, energy away from growing your business, working on your business, and it's forcing you to get into your business and spend time on training, which we all know is a pain. The opportunity costs, right? If you can get a job done in, many of us are probably dealing with this right now with COVID, right? If like, I have a landscaper that works on my home, and he just came and did my spring cleanup. And that job normally he gets 5 guys, they come in, they rip it out, an hour later, they're done. He could only send 2 guys over today because of the COVID rules, and it took them almost 4 hours to get it done. So that's just opportunity cost. He just can't get as many jobs done as he could last year. Now, obviously, in this case, it's because of COVID, not because of injuries. But if he went from 5 to 4 because of an injury, then that same job that would normally take an hour maybe takes an hour and a half. And now he's either paying guys overtime because that crew can't get as many jobs done, or he just can't take on an extra client, right? And then ultimately the social costs too. There's social costs to this, which is if someone's getting hurt on the job, unfortunately in the social media world that we live in today, that person, if they become disgruntled, can go on social media and blast you, or go to Glassdoor and put a negative employment review on a website like Glassdoor. So there's all kinds of indirect costs that come with a lack of focus on total cost of risk. Okay, so we've beaten up some of these high level ideas pretty good. Let's get on to some of the tactical stuff. There are some easy ways to cut cost. The first is classification and payroll errors. And I don't mean to laugh, but 40% of all the policies that we come across have classification and payroll errors. And this is like workers' comp 101. This isn't your fault as a business owner, but basically just you have a salesperson. I was talking to plumbing business the other day, and he has 2 guys who used to be active. They used to have their own trucks and go do jobs, and they've kind of semi-retired out of that role. They're not actually doing any plumbing. They're now scoping jobs and selling jobs. Well, they were classed as plumbers, as operating plumbers on the workers' comp policy, when the class code for a salesperson is less than the class code for a plumber, or the classification, the cost per 100. Sorry, and that's an immediate savings right there. They just had employees that were classified wrong. The other side is payroll. If payroll goes up or payroll goes down, payroll gets moved around from different positions. Maybe you take, you drop a salesperson and add an admin. That payroll needs to be adjusted properly. There's all different ways where your policy, where classification and payroll issues cost your organization money. So that's spot number 1 that we go when we look. Make sure that the amount of payroll you're paying lines up with individuals properly in the class codes that they should be properly assigned to. The second is making sure that you're working with a carrier whose loss cost multiplier, or LCM, properly aligns with your industry. And what I mean by that is certain insurance carriers want certain types of business, and their LCM will be a little lower, a little higher based on what type of business they want. And that can be, that's one of the benefits of working with an agent that has access to multiple carriers, understands the marketplace, and can align your business with the carrier who is interested in writing your class of business. And you can find some savings there. There are also many policy credits. You go into some workers' comp policies and you just see people have 0 credits, and that's rarely the case that an organization warrants 0 policy credits. So if you go in, there's safety credits, there's drug-free credits, there's credits for certain contractor classes, and I'm simplifying some of this stuff, but you want to look through and see what your policy credits are. They should be listed right on your workers' compensation policy. If you have 0, that's probably a clear indicator that something's wrong, but you want to make sure that you're working with your insurance professional to see like what policy credits are available and do we qualify for any of these? And if not, is there something we can do during the next policy term to align our business with that credit so that we can capture it the next year? I mean, this can mean 10, 20% savings in some cases or more on your workers' compensation policy. So even if you don't, for whatever reason, like let's say you don't qualify for, a certain credit, like set up. Again, this goes back to the beginning about setting goals and objectives. If we want to capture that credit moving forward, we think that's a possibility for your business, then let's figure out what actions need to be taken over the next policy term so that you get that credit, or set yourself up as well as possible to get that credit over the next year. And then the last one, this is really an easy way to free up cash flow. Like, we don't write anything on estimated payroll anymore. Like it would have to be an exception to write on estimated payroll versus the next 3 options. If possible, pay as you go, kind of payroll integration or payroll self-reporting is always a better option, because what this basically means is you are only paying premiums on the exact payroll that you paid during the prior period. If you during estimated payroll, I mean, there are so many fluctuations in your payroll. There's also, then you have to audit your payroll every month. You are also setting yourself up for the potential of a big audit bill at the end of the year, where if you're on pay as you go payroll integration, which almost every single carrier is willing to do now, you can almost guarantee that your audit is going to be teeny tiny or nothing at all. Your owed audit, because you're paying premiums on exactly what you paid for payroll, and it's not this estimation process. I think if you are not on pay as you go or on payroll self-reporting, if you are estimating your payroll, there are exceptions, but they're exceptions. It is not the rule that you should just be trying to guess at what your payroll is going to be for the next quarter or the next 6 months. That is a really easy way to set yourself up for a big surprise audit bill at the end of the year, which now you have to either pay that as a lump sum, or you have to try to negotiate with the state to figure out, how can I make a payment plan? None of that is stuff that you want to deal with. It's just those are opportunity costs and efficiency costs in your time. It's actual capital out the door that you just didn't see coming. It's especially right now, that's not what you want to deal with. So if you can take your current policy and get yourself on payroll self-reporting or pay as you go, that is a best case scenario, and where we push almost all of our clients regardless of size. Okay, let's keep going. Experience mod. So we're going to be we're probably another 10 minutes or so, guys. I know I said I'd be 35 minutes. I pontificated a little at the beginning. So let's talk about experience mod. So not every organization classifies for an experience mod, but if your organization does, this is where you take real control of your workers' comp. So the experience modification factor is, I'm going to go high level on what this is, but basically it aligns your business versus other businesses of like kind, in how many, what your claims history is versus how much payroll you have. So if you are again, we'll take the landscaper example, because I was just working with a landscaper the other day. So you have a landscaper. If their experience mod is a 1, that means that their claims history versus the amount of payroll they have is in line with exactly what you would expect for that class of business, in this case being a landscaper. If their experience modification factor is above 1, that means that they're having more claims history versus payroll for that class of business. And if it's under, it's not. And what the experience modification factor does is either debit, which means increase your premiums, or credit, decrease your premiums based on how much, how far below or above that one your experience modification factor is. You have control of experience modification factor. And unfortunately, as you can see on the screen, 60% of all organizations' experience mod is incorrect. There are so many reasons for this because the experience mod is not known. Unfortunately, most insurance agents do not even touch this. This is why I come across businesses that are paying $80,000 to $100,000 in workers' compensation premiums, and they don't even know what their experience mod is. It's never been explained to them. Or if they've heard the term, it's always just been expressed to them that kind of your mod is what it is and try to operate safer next year. Like I was talking to a guy the other day, and we were just getting to know each other. It was very early in our relationship, so we haven't actually done business yet. But he said to me that his agent told him last year that he needed to be safer this year. Just be safer this year. And like I don't mean to it was like smoke was coming out of my ears, but I was also like kind of chuckling at the same time. And that's a terrible reaction. But I guess the reason for that was like, that's such a terrible answer. Like, yeah, I guess at a high level, yes, be safer, but that's not a plan. It's not a process. And it's certainly not like advice that this particular individual could take to his business. So there are many different factors to the experience mod. I'm not going to go all the way down into the nitty-gritty of what it is. I will say that the only pitch I am going to give you in this webinar is that at the end, if you are interested, we offer a free experience mod audit and review, and I'll talk about what that is. But that basically will allow you to see where your business, what actions and activities in your business are impacting your experience mod, either for the positive or the negative. And we'll talk about that in a second. Okay. So misreporting actual closed claims. So what happens here is someone gets injured and they put on reserve. I've seen some crazy things, say we'll call it $80,000. Well, what ends up happening is the claim is closed for $25,000. Now you have a claim being reported at 80, closed at 25, but it's never actually reported back to the NYCIRB it's never communicated back to the workers' comp board that claim was closed for 25 and not 80. So your experience mod is being calculated on a loss of 80,000 when really it should have been calculated on a loss of 25,000. And this goes, that third kind of white filled bullet, this is one of the main areas why I explain the insurance game. Like, there is no benefit to a carrier or an agent to have you properly reporting closed claims, right? There's no benefit to the work, because this is real work, right? I mean, we're talking about going back and auditing your claims history and making sure that claims weren't closed for less. And then if they are, making sure that they're reported and recalculated in your experience mod. Like, that's real work. And you're not going to find many agents or carriers that are willing to do that, because if they do, if you go from an $80,000 claim to a $25,000 claim, that could have a substantial impact in your experience mod, which could also substantially reduce the amount of workers' compensation premium that you're paying, and then drastically reduce the amount of commission that agent is making. So if you look at that, and again, I'm not saying this is anything nefarious. Most agents don't even understand what the experience mod is in its entirety and how to impact it. But there also is this moral hazard that's created by doing this work. Now, ultimately, I would love to believe that you do this work because then the insured, the business owner, stays with you and is happy in running a productive business. But That doesn't always seem to be the case, and why, this is one of the primary reasons why 60% of all organizations' experience mods are incorrect. Other places, you can identify top loss drivers, so you can find the places that are causing the losses. Like I said before, if there's a specific tool or a specific process or a specific procedure inside your business that is consistently creating losses, well, now we can go and say, well, geez, when someone hops on that tractor, there's whatever, there's no slip guard, and we've had two guys fall off that tractor and sprain ankles or twist knees or break, all kinds of crazy stuff that happens in the last year. Like, maybe we should go up and put some slip guard on that thing. Or that's just one example that I had that was actually a few years ago. So okay, identify missing safety procedures and processes. Again, this you kind of seeing this theme, right? By figuring out the proper steps that you may have put in place. I mean, guys, this isn't like, I'm not trying to tell anyone that they're not doing their job well. What happens is, we all get busy, and you probably sat down and said, here's how you do this. 1, 2, 3, 4. You get to 4, you do 1, 2, and 3, you're going to be safe and effective and everything's good. And what happens is, over time, as you get busy doing other things, and one of your staff members either forgets or figures out that if they skip step 2, they can get to 4 a heck of a lot quicker, which makes you happy. But unfortunately, by skipping 2, they're occasionally getting injured. You might just not know that that's happening. And that's how we can, by working through your experience mod and really dissecting your claims history and matching it up against some of your peers. We have a proprietary software in our office that we use, that we run all your claims history and payroll through and everything. And then we can compare that against other organizations in your industry. And that allows us to find a lot of these things. It helps us pop certain claims and certain instances that are causing you issues. Mishandling of claims and a lack of a return to work policy. So I want to just take a second and talk super high level about return to work. I could do an hour on return to work, and I'm already 9 minutes past how long I said this would take. Why is it that when you practice a webinar and when you actually do it, they're always longer? I don't know. Okay, return to work policy. So when I mention return to work policy to most organizations, they either say, we don't have one. I don't want to bring someone back to do menial work. And my mentor says, he says, count paper clips. I've actually never heard anyone say count paper clips, but I've heard different versions of that same thing. Or we have a return to work policy. We're all set. And I'd say 98% of the time, all three of those answers are BS, because a real return to work policy is documented. You have specific roles and functions in the organization that are set up and ready so that when someone gets injured, the moment you are able to bring them back to the business into one of these limited work functions, you can, right? Like, if you can let's take this landscaper again that I'm working with right now. So let's say one of his guys who's out cutting lawns all day, let's say he gets hurt, right? And he can't cut lawns for a month, but within a day, he could be back in the office making calls to clients, following up on either sales, following up on bills, something like, really any office function. The moment you can get them back to work and start paying them a check, even if it's a limited function versus what their standard function is, you are limiting the claim that you are going to pay. You are drastically reducing the claim that you're paying to that individual, specifically the indemnity portion, versus if they're just out for a month because they can't cut lawns. Like, this is major change. And it doesn't happen if, one, we're not establishing a culture that limited work functions are acceptable. Oftentimes, specifically in more ego-driven businesses, you find, and I don't mean ego necessarily a negative sense, you find, I don't want to do that work, or, he doesn't want to do that work. That shouldn't have anything to do with this conversation. It's about getting that individual back to work. One, for their own morale. They're now around people, not sitting at home on the couch eating potato chips, getting less healthy. It gets them back into the work, gets them seeing another side of the business. It might bring you more productivity in a different area of your business, and it drastically reduces the size of that claim, or can drastically reduce the size of that claim. Return to work policies are a major portion of what we do here at Rogue, because risk is in our name, not insurance, right? Like, this is what we're trying to do, because if you have a quality return to work program, like, that alone can drastically reduce your premiums through specifically the Experience Mod. It also creates a more productive work environment. Like, you start showing people, like, you got hurt, I'm not mad at you, right? Like, employees have said to me before, like, I'm worried that my boss is mad at me because I got hurt. Well, that's a culture. I mean, look, I'm not a therapist, but that's a cultural issue that we can change over time by creating acceptable functions for people to move into if they're injured. And there's just a lot that we can do there. Okay, so Experience Mod's a big part of it. And like I said, we have tools. This is really where I think Rogue earns its money, is in this part. I mean, we work with, GL and BOPS, and we do a lot of professional and cyber too. But the reason I'm doing this workers' comp webinar is because this is our bread and butter, and there's just a lot here. So frequency beats severity, right? This is what I tell every one of my clients. I say it in almost every video I do about workers' comp. I say it to almost everyone I meet who owns a business. Frequency breeds severity. If we can create processes and procedures and a culture that limits the number of claims we have, we are going to drastically limit the severity of the claims we have. And we just want to think through that. It's three simple words that can really, that if we can build a culture around limiting the frequency of claims through process and real, and through action, we can drastically reduce your workers' comp. So some best practices just to keep in the back of your mind. These are simple everyday actions. Report every incident, not every injury. So if someone falls off a tractor and doesn't get hurt, report the incident. They fell off the tractor. The issue is, if you report the incident, and again, this is part of building a culture, is if they report the incident, then you figure out that you need a slip guard on the tractor before someone falls off the tractor and breaks their leg and can't work for a month, right? Report every incident. John fell off the tractor because we didn't have a slip guard. Oh, I didn't realize we needed a slip guard on the tractor. I'll go out and buy a $10 slip guard at Home Depot, put it on the tractor, and save myself the thousands of dollars in workers' compensation premium that I have to pay if John had fallen off and sprained his ACL and couldn't work for a month, right? So report every incident and create a culture of that, and not a snitch culture, right? Like, you don't want people, you don't want to incentivize people for finding things that other people are doing wrong. You want to make it as positive as you possibly can. Okay, reward staff for safety, similar to production, right? It's easy to reward staff for production. You performed this function, you sold this thing, you executed this process the way we wanted. We're going to reward you. If find ways to reward your staff for safety, just as you do for production. It doesn't have to be like as much of a reward as for production. I get it. But if there are ways that you can do that, that helps build that culture of safety. Hold regular safety meetings. That one seems pretty obvious to me. Assign an owner for safety and risk management. So if you were a customer, client of Rogue Risks, obviously we would, if you wanted us to, we would work as much as our relationship dictated as a risk management consultant. But you want to have someone in your organization who's kind of the quote unquote owner of safety and risk management. Someone who we all wear many hats, but maybe, for a couple hours a month, they're thinking through the safety and risk management of the business. I would actually say this should not be the actual owner of the business. If there's an office manager, if there's an HR manager, if you have someone else who can wear for a couple hours a month that safety and risk management hat, and just think through that filter for a couple minutes and make that part of their job, the hope is they will be able to find ways to create a safer work environment. Always, and this is a balance too. You don't want to be so safe that you can't actually do your job, but you want to be, because there are some job functions that have inherent risk in them. and engage your staff. Like as a leader in your business, talk about safety stuff. You don't have to be walking around like, you know, being Mr. or Mrs. Safety. Just, you know, just make it, try to engage people and maybe just ask the question like, hey, John, you know, is there anything that you feeling, is there anything that's not working? Anything you're feeling unsafe about? Like I'm butchering this. You can tell it's the end of a 47-minute webinar, but the idea here is if you as a leader can kind of stand out front of these conversations, it'll help everyone know that that's a part of the business that you want to continue to be important in the culture. So as I said, my one pitch to you here, now that I have you, is an Experience Mod audit and review. We're going to work, if you would like to engage in this, you can email me, ryan@ryanhanley.com. You can also go to our website. We have a link there, or just respond to an email or contact me whatever way you want. Our phone number is on the next slide. But we're going to work through your Experience Mod. We're going to break down what claims are impacting them, where we see gaps, where we see holes, where we see things that you could potentially fix. We're going to work on your policy and procedures. We can talk through those. And ultimately, we're going to do a full claims review. And we bring that back and deliver it to you. And we'll present to you what we think are areas of improvement. You can take it, give it to your current agent and let them do it. I don't do these experience audit and reviews because I want them to be heavy sales pitches. They're not. That's 100% not what it is. But my hope is if you can see how gangster we are at this part of the business, you will maybe want to work with us at some point in the future. We take this business very seriously. I think you want to have as much insurance as you need, not more. And you want to pay as much as you have to, but not more. And those two things, cheap and good, they don't have to be diametrically opposed. You can have a very competitively priced policy that you're paying exactly what you should for the exact coverage that you should. And I don't believe you should have to overpay or that you should have to skimp on coverage. I just think it takes a little bit of work. And a lot of that work should be shouldered by your insurance professional. So as I said at the very beginning, my name is Ryan Hanley. This is Rogue Risk. I own this agency. You can get at me at ryan@roguerisk.com. You can call the phone number. You can visit us at roguerisk.com. We have lots of videos and stuff. And now I'm going to quickly look and see if we have any questions.